Hi guys, in this video we'll discuss why you shouldn't panic when there's a market pullback, correction or even a market crash. I'll run through the steps that I take to ensure the portfolio is as protected as it can be and how I look for opportunities in circumstances like a market crash or a market correction. I'll also cover off the portfolio stats and any open and closed trades for the week. Hi guys, hope everyone's safe and well. As always, please remember that the contents of this video are not to be meant as financial advice and are my opinions and my opinions only. So before we run through the stats and the portfolio for the week just gone, obviously you've probably have seen or have heard it's been quite a volatile week in the markets. We finished up, well, the Dow finished up just over 0.1% up for the week. S&P was down just under, well, just over 0.71%, and NASDAQ was down about 1.5%. But it was very choppy. At one point, I think the S&P was lower than that, so was the NASDAQ. There was a bit of a recovery on Friday, and then it ended fairly flat. So before we jump into that in more detail and talk in general about market crashes and corrections and what I do to basically deal with those, I'll just quickly run through the stats. It's not been a particularly active week on the portfolio. We're pretty well positioned, I like to think. So as you can see, February we're up 10.56%, although I am actually waiting for these stats to update on eToro. I think yesterday, which was Friday, we closed up about 1.3%. So we should actually be up sort of just around about 21% for the year, and more like 11.5% or over 11.5% for the month. So still going pretty well. Obviously, we did experience a lot of volatility this week. As mentioned, there was quite a few pullbacks, specifically in some of the Chinese stocks that we have in the portfolio, but we're still well on course with our good start to the year. So if I quickly cover off the trades, so there's only 2 trades closed this week. One of them was Tencent, which we closed at 28% profit. That one looks to be hitting a little bit of a buffer, a little bit of resistance. So we took some profits on that. And the other one was Realty Income, which could push slightly higher. It seems to be ranging at the moment. And to be honest, with the corrections that are taking place, I wanted to try and get a bit more cash in hand. So I'll close this one out for a small profit, just so we can have a little bit more cash ready and waiting for any opportunities that might present themselves if there is further pullbacks or a correction in the markets. So when it comes to the open trades for the week, for the first time in a long time, actually, we've actually not opened any new trades this week. There's a couple of reasons for this. One, I've not seen any opportunities at the moment that are good enough for me to enter into a trade onto. Two, like I mentioned, or like I alluded to, I want to keep some cash in hand because I do see some opportunities forming. So there was a couple of tempters this week, but nothing really that enticed me enough to part with some of the cash that we've got. So it might be the next week we do take some more profits off the table, hold some more cash, because it is looking like especially some of the technology stocks are looking like they might cool off a little bit. So we could potentially jump into some of those. So no new trades this week, which is unusual. Normally I'm quite active, but like I said, I see some big opportunities forming. So I wanted to have a little bit of cash in hand ready to make some further investments. So I mentioned it in the headline of the video, why not to panic in a market pullback, correction or crash. So I'll quickly run through what I do in these situations and why I think it's important to stay disciplined and true to your strategy. So there's a few definitions out there that define market pullbacks, corrections and crashes. I won't jump too much into that because it's a quick Google search away, but generally a market correction is seen as a 10% pullback from recent highs. Now, normally that's done on measured against indices, but can be used against stocks as well, individual stocks. There's a small definition here. In a correction, the 10% decline will manifest over days, weeks, or months. In a stock market crash, the 10% drop occurs in just one day. So normally you will see in a correction a more drawn out pullback again, essentially, which could be what we're seeing at the moment. You know, I think the S&P and the Nasdaq have been on quite a strong run for the last couple of months, hardly having any losing days or weeks until the week just passed. So, you know, we could be seeing either a pullback or a correction. I don't think we're going to see a bear market. But people, especially since last year, where the markets have been on a bit of a strong bull run. Yeah, so for me, there's a few things to consider. Obviously, number one is you need to be comfortable in the trades that you've got open. I think it's important to remember that no one is going to consistently make gains every single month, every single year. There will be downturns, and it's how you deal with those and deal with the opportunities that are presented during those times. You can look at the best investors in the world, the Warren Buffetts, Ray Dalio's. I think I read that even Jim Simmons' Renaissance Technologies, which is one of the top performing hedge funds for the last 20 years, they've had a terrible start to the year. So no one will consistently be able to, make gains. So yes, we don't want that to happen, but you've got to accept that at some point it probably will. So you need to make sure that you're positioned and basically disciplined to your strategy to ensure that you're well protected against these moves, and also ideally have some cash on hand to take advantage of opportunities when these arise. So I'll quickly run through some of the things that I do to sort of protect the portfolio, and part of the strategy I use in my investing techniques, just to sort of mitigate the risk of potential corrections and pullbacks. Like I said, you're never going to get it right 100% of the time. This week gone, my portfolio had quite a significant pullback, even though we're still up 11% for the month. It did have a pullback, but I guess some of the things that I do to sort of protect myself against this is to not overexpose myself to certain sectors. I'm quite a well diversified portfolio. So, for example, if I go into the portfolio now, you can see there's quite a mix. Even though the Chinese stocks we have been performing well, so QFIN, NEO, QDN, they're doing really well at the moment. They did have a significant pullback this week. Now, that's fine, because to balance that off, because of the diversified portfolio that I've got, some of the oil stocks done well this week. So yes, there was a pullback, but because I'm exposed to different sectors, the balance across the portfolio is quite well. Now, obviously, being diversified is all well and good, but if there's a market crash, then 9 times out of 10 that is every sector's going down the pan. So what would you do in that instance? Well, there's two things that I would do. One is not panic. If a market crashes, then it crashes. There's not a lot you can do about it. Ideally, you'd have some cash on hand, because 9 times out of 10, when a market crashes, and that's when I'm talking a crash, I'm talking over 10% or close to 10% in a day or a couple of days for a major indices, not a particular stock. We're talking the S&P 500, the Nasdaq. If they crashed like they did last year, end of March, if they were down, up to 10% in a matter of days, then you're looking for opportunities at that point, and that's what I'd be doing. So that's why I try and keep a bit of cash in hand. At the moment, it's a little bit less than I'd like. I think we're at just under about 5%. So I will probably be looking to try and get a bit more cash at the ready. But yeah, when there is a market crash, you do tend to see a very quick snapback. Obviously, you can still result in there being a bear market after a market crash, but you do tend to see, even in that instance, you do tend to see a big snapback. So over the next sort of couple of months, you'll get people investing in these low prices. So number one, be diversified. Number two, have some cash in hand at the ready to make use of opportunities. And number three, which is really important, which is essentially your risk management. And what I mean by risk management is how much you are willing, or you are investing into each trade. So I've seen some people on eToro that have done really well over the last sort of 6 to 12 months, because essentially the markets have just gone up, and some of the leverage and amount of portfolio they've invested into each trade has been quite significant, which is why they've got amazing returns. Now, me personally, I have a rule that I don't tend to trade or open a trade any more than 1 to 1.5% of my portfolio. So essentially, if I lost everything on that, if I lost or that trade went to zero, I lose 1% of my portfolio. Now, you know, touch wood, that would never happen. I'd close out a position if it went that way, and I wasn't, and the company wasn't performing as it should, or if there was a major issue that was affecting that particular sector, that could be a long drawn out issue that maybe I didn't want to leave my stock invested, my trade invested in that company for that amount of time. So no, I'd never let it get to that. But the point is, if it ever did get to that, I'd only lose 1% of my portfolio. Now, if we quickly switch to this chart, just to give you an idea on, you know, people potentially putting on 5% or 10% of their portfolio in one trade. Now, if it comes off, brilliant. You know, you're getting a really healthy gain, but the risk is that you don't. And then you can see how quickly it costs you to try and chase back those gains. So, you know, if you lose 5% just to break even again, you're gonna have to make 5.3%. When you start getting further down, you know, into higher territories, 20%, you need to make 25% gains just to break even. That's not including any profit. And obviously, the further down you go, the more extreme it gets. So you can see why, you know, as people start to essentially gamble their portfolio and chase those winners, it becomes more and more difficult. So one thing to add to the other 2 points that I raised, stick to your risk management strategy, be disciplined. Like I say, I only trade 1 to 1.5% on any individual trade. I will never trade more than that. Yeah, so position sizing and risk management are really important, and obviously that will help you when it comes to market crashes or market pullbacks or corrections, because you know that you're comfortable even if trades do move against you or the market moves against you because of an unknown factor. You're comfortable with the amount that you could lose per trade. I think that's important. You know, you're only going to, yes, your whole portfolio might go down, but as long as you're, you know, still individually happy with the trades that you've got, then there's not too much to worry about. Whereas if you've over leveraged or, you know, used 20% of your portfolio on one trade, then you're more likely to panic and want to sell, which is what you don't want to do in these moments. You want to be patient. You essentially want to be non-emotional, which we've got this little quote from John Bogle, who's the founder of Vanguard. Time is your friend, impulse is your enemy. So essentially, when you see a market correction or a market crash or prices move against you, don't panic. Remember why you're in the trade. You've done your due diligence. You're not overexposed because you're only risking 1 to 1.5% of your trades. So just wait out the correction. Obviously, if the correction is in a particular, or if the market crash is in a particular sector or a particular stock, then you can reassess your situation. It may be that you do close out some positions, but essentially don't trade on impulse. You're an investor, you know, mid to long term. Myself, I'm a mid to long term investor. So it's important to stay calm and disciplined in situations like this. So then they also bring really great opportunities. As you can probably see from last year, March 23rd was when the stock markets took a bit of a hit. And then since then, you can see every month we've had some nice gains. November, obviously 32%, which was nice. So yeah, just to cover off those points again. And this is obviously my opinion and in my my strategy, risk management, how much you position sizes, how much you put into each position size. I don't do more than 1 to 1.5%. Diversification, you know, just naturally because of my strategy, I am exposed to a range of different sectors, which helps to balance out the portfolio. And also, if you can keep some cash in hand, so if there are market corrections, you can make the opportunity count. And remember that, like John Bogle said, don't trade on impulse. Time is your friend, impulse is your enemy. And then just when it comes to market corrections and pullbacks, not so much so crashes, but like I said, you know, the S&P and the Nasdaq did correct or pull back quite significantly this week. We've been on quite a long run of green weeks. You know, markets have just been going up continually, and I think you tend to read a lot in the news, or people search a lot for an answer to why this may be. And one thing I think I've learned over the years of, you know, I've been trading for about 7-8 years now. One thing I've learned is there's not always an answer. You know, obviously when there's huge market movements around, you know, the elections, Brexit, COVID, all of these sort of things, you know, they're market moving events, but there's not always a reason why the market pulls back. Like I said, we've been on a quite strong bull run for the last couple of months at least. So it's natural for sentiment to shift quite quickly when markets are concerned, because, you know, people want to lock in some profits. And I think when people see a slight pullback, they're more inclined to want to lock in what they've got. Don't chase their profits. Don't lose their profits. So, you know, sometimes you'll in the news, you will read certain things that are framed in a certain way to try and explain why the market has done what it's done. And a lot of the time, you know, you can frame these different news articles in a positive or a negative spin. So don't always be swayed by what's happening or being said in the news. Like I said, sometimes it's just a case of people are just taking profits and sentiment shifts because, you know, it's the end of the month, it's the end of the week. We've been on a huge run, so people want to take some profits off the table, and that can filter down and start pulling back across the board. So yeah, don't worry too much about that. It's important just not to panic, stay calm, stay disciplined, and stick to your strategy. So hopefully this video has given you an idea on why not to panic when markets drop suddenly, or when stocks or sectors move against you quite quickly. Like I say, it's important to stick to your strategy, stay disciplined, ensure you've got good risk management. Potentially you've got cash in hand, you've got a diversified portfolio, and remember that, yeah, time is important, but don't trade on impulse. Hopefully that's helped a few people. You know, if you have any questions, like I say, I've been trading for about 7 or 8 years now, so I like to think I've got some experience. Previously, before trading in stocks, I was trading in Forex and commodities, so it's a similar principle there. There's always market moving events, there's always big drops and you know, big pullbacks. So it's just the nature of the beast that is the markets, because it is sentiment driven, so things can change very quickly. But it's no time to panic. Always assess, don't panic. But yeah, if you'd like to stay updated with my weekly updates or my weekly thoughts on the market, then please subscribe to my YouTube channel. If you'd like to copy my trades, then you can do so on eToro. There's a link in the description. Like I said, I think for the year we're doing quite well. The yearly target for 2021 was 20%, and we've already beaten that. Yes, things can change, so I'm not going to get ahead of myself there. But we've got a good base to build from into the rest of the year. So if you did want to copy my trades, then, you know, you can do so on eToro, link in the description, or you can also follow me for my sort of regular updates on market and particular stocks.